How's it going, everyone? It is Friday, April 26th, 2024, and this is the video for today. So before we get into this video, I wanted to give a quick update on how I want to do these videos. When I was listening to some of my videos this week, I came across, in my own opinion, as a little bit on autopilot. I guess I've been doing these videos for about 4 months now, and I kind of go through the same stuff in each video, right? The market bias, the last pick, and then the new pick of the day. So I can kind of get on autopilot, and I don't think I convey my thoughts and my market opinions as clearly and concisely as I want to. So I want to hold myself to a higher standard. So I rethought out how I want to format these, and I've written out specifically what I want to touch on so I can really get through the information quicker and more clearly. So I think this should result in shorter videos and also more higher quality videos. So with that intro, let's get right into the last pick, which was our WDC time spread. So obviously, you can't look at how the time spread did on the chart, but I entered this time spread. I got in at 58 cents, and I got out this morning at 90 cents, and this actually would have been a 100% winner. You can see WDC on the chart stayed within its expected range. Here's the open of yesterday. Here's the close of yesterday. Here is the current price. Didn't budge a single bit. So excellent time spread, 100% winner, but I'm going to mark what I got on it, which was 40 cents, or I guess 32 cents on 58. So let's call it somewhere around 60 cents, something like that. That was a nice win. So time spreads are tricky, and if you don't understand them, please do not take them. You will get yourself in quite a bit of trouble. Current portfolio right now is on. This stock is compressing. It's holding the line pretty well, and it expires on May 10th. So I am not worried about the stock at the moment. The market's rallying. I would like to see the stock rally at least, but as long as the market is strong and the stock is holding its own, the stock could regain its footing and make a move up. This is our stop right here below the $31 level. That is our strike price. Now, if the market rallies and the stock doesn't really do much, the market starts to falter, then I would look to exit out of that spread. Again, we're using the 100-day SMA right now as that technical stop. So if the market breaches the 100-day SMA, I would expect on and on to hold the line. If it doesn't hold the line and it breaks through, then we'd have to either consider closing the spread for a loss or legging out. The big consideration with these put credit spreads is the timing of all these moves. I have time until March 10th. I have another 2 weeks. So if the market, let's say, did not rally with the Google and Microsoft earnings and instead tanked, then I could actually hold on to the spread if on and on tanked, because I knew I had time for the spread to come back in the money. That's an example of knowing the time of the spread and the cycle of the market. We are starting this bullish cycle right now, so I'm feeling pretty good about this on and on spread. So I'm going to remove WDC. Let's get into the market picks. On the notepad, I've listed out my market fundamentals and market technicals here, so it's very easy to see. Now, my market fundamental bias, it was a 2. Now it's more of a 1. I am mildly bullish because of the slower and lower and lighter GDP number that has come out recently. And it puts more pressure on the Fed, and there's a little bit more uncertainty at this point. We're not sure if the Fed has gone too far. That's going to be the main message of the market. So until we get to see what happens further with inflation, further with the tightening cycles, I don't want to get more bullish. I'm a little bit more cautiously bullish at this point. The important thing to know is what would change your bias. What would get me more bullish is if the GDP growth comes back and looks still pretty good next quarter on a year-over-year basis, and inflation starts to come down. That means that whatever we're seeing now is just sort of a temporary blip and is not a trend reversal, so we can feel confident about being more bullish because the chance of a recession is now reduced. Long-term technical, I am also a 1. Strong bullish move. We're in the pullback phase, and we're starting this move over here. So the strength of this move is going to determine whether this bias changes. If we get a pretty strong and fast move that tests the all-time high, that would get me a little bit more bullish on a longer-term fundamental basis, because I know that buyers have a lot of control and they erased these losses pretty quickly. If the move is choppy and wimpy and weak, and then we are not able to really challenge this level and we make a lower high double top, that would make my long-term technical bias a 0, because sellers had control, buyers didn't really do anything much, and so we'd have to be in a more neutral position and look to trade both sides. So that's what I'm looking for over here. On a shorter term time frame, I am again mildly bullish. The only thing that is holding me back from being more bullish is the slew of market moving information next week. Amazon earnings on 4/30, FOMC on the 1st, and Apple earnings on the 2nd, and unemployment report coming out that Friday, the 3rd, I believe. I need to double check that. I also have to check ISM. I think ISM usually comes out in the first week of the month, so that is going to be a critical factor here. So as you can see, generally we are mildly bullish on all time frames. We're not going to be stacking up on any long-term swings, but there's plenty of opportunities to get in at least some call debit spreads, some day trading longs. And if I'm a swing trader, I would definitely have some starter positions here. And I think the opportunity next week sets us up nicely for call debit spreads. The reason why I'm liking call debit spreads right now is because, again, a lot of new information next week. I don't want to be in a whole bunch of positions really heavy on, and then we have a lot of negative reactions. We're hitting a lot of binary events coming up, and given the new information, we don't have any cushion fundamentally on all those on those binary events. So if everything was great across the board and the market was already above its A VWAP E at this point, yeah, you could feel more confident being more aggressive because the market has already shown its strength and it can weather some of that news. The market is mildly bullish as weather took some heat on the meta, but did well on the Google and Microsoft. So we're not as strong as we could be if we were strong on all of the binary events that occurred this week. The main thing we're watching for here is what the market does today, and we are pretty close to the 100-day SMA. We might break through. We're also pretty close to the AVWAP-Q, so those are our next two levels. And then finally, we have some horizontal resistance right here around 520 before we get to the all-time high. So those are the major resistance levels coming into play for the next week. The support levels for the next week, we also have this gap first over here. So that's going to be the first level of support. We have this low from yesterday coming in at around 497.50. That's going to be the second level of support. This low from April 19th coincides with the 100-day SMA at 494.55. So that'll be our third level of support. So that's what's going to be in play for this next week. Let's zoom in on the intraday action. So my intraday chart is a 1 bullish. Why is it a 1 bullish? So let's look at what happened yesterday. We had a gap down and we filled in most of the gap. Decent price action, pretty nice. Volume was okay. Today we had a gap up and then we rallied in that gap up initially. And then we started to bounce around a little bit, started to compress. But this is pretty bullish because we had this move up and we didn't retrace all of the gains and fill back in the gap. We also didn't lose the gap immediately in the first hour. So because of those two things, I am mildly bullish. I'm not going to look to take any positions right now, but we have a nice opportunity setting up intraday for some day trades. This bullish cycle produced. This bearish cycle was benign. So we had a nice opportunity here. But then this bullish cycle was also benign, so we got back on the sidelines. Then this bearish cycle was also benign. So when we have a lot of benign cycles that are not producing, eventually one is going to produce. And we have this bullish cross right here at this horizontal level trying to break out. So I would feel pretty comfortable taking some starter longs on some day trades and even some starter longs on some swing trades. So with all that, what are some picks? What is looking great today? Well, my pick is probably going to be Goldman Sachs CDS. So let's start with the daily chart first. Why do I like this setup? Obviously, we're through earnings, and we also are through a lot of financial earnings, so we don't have to worry about any peer earnings coming into play. Stock was pretty choppy, but has rallied up higher, broke through this all-time high, came back and retested it, as well as the 8 EMA, and bounced up higher. It did all of this while the market was being a little choppy, right? Market had a pretty big retracement yesterday. GS didn't really move too much in terms of close, right? Did not really change. As soon as the market moved up, GS also moved up today. So it's passing these tests, which is excellent. It also rallied a lot sooner than the market. So the market started to rally on April 22nd. You can see GS started to move up right here on the 19th, 20th, was holding the line and was not selling off in this last stage of the market decline. As soon as the market got any ounce of support, GS managed to rally. So GS is my pick. Again, given the information next week, I want to keep this shorter term. So that's why I'm opting for a CDS here. I'm going to see if this is coming up on my CDS scanner. Okay, well, might not be. It should be. So GS is going to be my pick. I am going to pause the video and quickly check if there's any other picks that could be even nicer. Okay, I am back and couldn't really find anything that was as compelling as GS. So this is going to be my pick. How would we structure this trade? So let's take a look at what's happening intraday here. Let's take a look at what's happening with SPY here. So SPY is breaking out. GS is looking pretty good. And what I loved about the action today was we got these long red candles, came back, tested the prior day high, and then we got really nice tight price action. You can see consecutive green candles hugging the 8 EMA, and we blew through the new high, very orderly selling. Now, I don't want to quite chase here because I knew that we still had this bid check over here, and we could also see the stock pull back. So I'm going to wait for this pullback in the stock and try to enter on an LRSI M5 alert. It might not line up with the market intraday, but that's okay because we are doing a CDS. So I have an alert set right now on an LRSI M5. I'm also going to set an alert on an HA reversal because this trend was pretty strong. So I do expect some buyers to step in, and they may step in faster than an LRSI alert can catch. So I have a bull M5 HA reversal saved, and I love having these templates, by the way. They're very handy. Save them over here. So when GS, did I actually create the alert? Okay, I did. Nice. Okay, so when GS pulls back and it finds a little bit of support, we can enter our CDS at a great price. The type of CDS you want to do is going to be up to you. We have the ones right here, so I'm going to do the CDS expiring next week, not this week, so the May 3rd CDS. And depending on what level this is at when the pullback is over, that's when I would do my long call and my short call. So right now, I think something like the 525, 535 could work pretty well, especially if this comes in a little bit. Make sure you're getting half the distance of the strike price. If you don't want to go as far out, you could do maybe a 425, 430. So that's a lot smaller debit, but you can see how right now that's doing pretty well. And the 430, this should be a $2.50 debit. So want to wait for this to come back in a little bit. If you chased, you'd probably get the 275, 235.50, which is a little bit better. So wait for this to come back. So the entry price is right at the long strike price, and we can get in. So I'm gonna say the 425, 435 for this video. And when this comes in a little bit, I think you should be able to get it for under $4 on this strike. And given the move next week, we know that GS has a ATR of about $9. So if it pulls back a little bit, get in around 425, we have a $9 ATR. We should be able to get a nice move up to 435 with any market tailwind. So that would be the goal of the trade. I believe if I look at the trade year strike, you can probably go for something like 20-25% if it gets that level. You can't get too aggressive on Mondays, but if it does make that move, I think you have a great opportunity to get 20-25%. So get in 425, 435. Maybe I'll just write this down over here so it's easy to see. GS CDS 425, 435 for less than $4, and then you target a 25% win, which would be around $100. Okay, that is the pick for today. Thanks everyone for watching, and we will take a look at GS in the video next week.